Good morning and welcome back. Crypto bouncing in a big way today, and we have some fascinating news out of the US just a few hours ahead of that big CPI data release, which is going to be very fundamental to shaping the macro environment going ahead. But let's jump in straight away and take a look at Bitcoin pricing. You can see we are today at $110,000. We've pretty much been moving up only since the last down move yesterday. That puts my BTC long position down just $3,300 or a little bit less than that. We're in at 0.9 BTC on a 20x leverage. This account is worth something like 13 grand, or it was worth something like 13 grand before we went into drawdown on this position. If you caught the last couple of videos, you'll know we were averaging into this and we got into the last portion of that trade, the last 0.1 BTC of that trade, pretty much on this down move here. We were bidding into this area of liquidity here that we put in back on Friday the 17th. And we also suspected we might come back to that area because of leverage building up in the market. Now, as I say, price has been pretty much up only from those lows that we put in, from those lows that we bid into. But once again, that has led to a lot of players jumping in leverage long after the fact. So if we take a look at the liquidation map here, you could see there is $795 million worth of cumulative long liquidation risk at 98,376. I like to look at where this peaks out, and for me, the closest area of interest is here at $108,300. So if you take a look on the chart, you can see 108,300 is not too far away. It is kind of in that liquidity zone, but just be aware there is that long liquidation risk. And if we see a repeat of the pattern that we continue to see, history would dictate that it's likely if we come back down, we will liquidate some of those longs and extend that move a little bit further to the downside. But for what it's worth, that is not stacked in a part of the chart that I'm particularly nervous about. I think it's perfectly likely and perfectly healthy if we continue a couple more times to dip down into this liquidity area here. I'm still a buyer at those levels. So if we look at this from a technical perspective, then we have technically invalidated the uptrend that we put in since the lows on the 17th of October. That would be the low here, the next high here, the higher low here, and the higher high here. And then we came back down to break this low here. So technically we've broken away from that uptrend. We've invalidated it and we've reversed it. But that comes with a caveat that this move here was heavily liquidation driven, and that is clearly an overextension, right? That's just one-way price action straight up. So I'm not feeling too uncomfortable in this long. I still think that this is setting up nicely for further upside movement. But once again, I wouldn't be surprised if we stabbed back down into liquidity before that ultimately happened. And if we zoom out to the daily charts, this type of price action is totally normal after similar down moves, right? Back here in March, you could see big sell-off, bit of hope, big sell-off again, and we basically stabbed around in that same liquidity zone where the first sell-off got to a couple of times before eventually moving up. This time is actually looking stronger still because we haven't spent so much time at the downside of that, in my opinion. Also look back to 2021, similar scenario again, right? Big sell-off, a little bit of hope, and then a couple more stabs back into the liquidity that initial sell-off bounced from before ultimately turning around. We've spoken about the gold correlation. Gold's still down, and as we've seen before, when gold turns around, we tend to see a rotation of capital into Bitcoin and these big runs in Bitcoin. And gold's still down massively from the highs put in earlier in the week. And to be fair, it would be an absolutely monumental move if gold was to recoup those losses. But just as a reminder, biggest single day loss in gold since June 2013. So absolutely massive down move in gold. And historically, that tends to lead to rotations back into Bitcoin. Some pretty fascinating news out of the US today. We have seen Trump pardoning founder of Binance, that is CZ. Donald Trump issued a pardon for the founder of the world's largest cryptocurrency exchange on Thursday. President Trump exercised his constitutional authority by issuing a pardon for Mr. Zhao, who was prosecuted by the Biden administration in their war on cryptocurrency. The war on crypto is over. CZ pleaded guilty in late 2023 to one count of failing to maintain an anti-money laundering program and stepped down as CEO of Binance, which paid $4.3 billion to settle related allegations. He was sentenced to 4 months in prison. Trump commented on the pardon during an exchange with the press on Thursday afternoon, downplaying Zhao's crimes while claiming he did not personally know the crypto mogul. Are you talking about the crypto person? A lot of people say he wasn't guilty of anything, Trump told a reporter who asked about the decision. Representatives from Trump's family crypto business have held talks with Binance about taking a stake in the US arm of the exchange, the Wall Street Journal reported earlier this year. Zhao disputed that he was seeking to make a deal in exchange for a pardon. Whichever way you look at this, it's obviously just another piece in the puzzle of crypto finding a regulatory home in the US. Also, Russia to legalize crypto payments in foreign trade. Russia is to legalize international cryptocurrency settlements. Finance minister says crypto payments need legislative regulation. Russian authorities aim to move beyond the current experimental regime. Finance regulators in the Russian Federation are going to officially legalize the use of cryptocurrency in cross-border payments, moving beyond the existing experimental legal regime. The Russian Ministry of Finance and the Central Bank of Russia have agreed to formally legalize the use of cryptocurrencies in foreign economic transactions. So that could obviously open up a massive part of the market. Now, aside from these two regulatory pieces, we know we have CPI data coming out. That is key inflation data, and that directly affects the Fed's decisions on rate cuts, which affects us in crypto because we know if rates are cut, money becomes cheaper and liquidity tends to flow into risk assets. You can see actually the odds of a 25 basis point rate cut at the next FOMC meeting are increased from yesterday up to 98.3%. But what we're really interested in, because this is such a high chance of that rate cut, most of this is likely already priced in. Okay, you can see S&P right back up at all-time highs from that massive drop towards the end of last week, down nearly 4%, but we are right back up to all-time highs. Investor confidence is high, and that next rate cut is probably already priced in because obviously the chance is pretty high that we're going to see that. But what we're interested in the CPI print later today is projections for further rate cuts going into the end of this year and into next year. So there you go, still in my long position. I wouldn't be surprised if we slip from here because, once again, the lemmings are jumping in on leverage long. But if we look further into the future, the macro environment, the regulatory environment is looking good. Key data coming out later today. And we have the elephant in the room of the massive amount of short side liquidation risk to the upside. That is reduced somewhat from yesterday, but still at $4.71 billion. And if we see price movements to the upside, particularly if we see a quick price movement to the upside, that could well catch a lot of these shorts off guard. That could well liquidate a lot of these shorts and lead to a cascading effect, the opposite of which we saw towards the end of last week in that massive $19 billion liquidation event. Except this time, the price movement isn't going to be straight down. It's going to be up rapidly if we get into some of these liquidations. But as always, that is just what I'm looking at, purely what I'm interested in. I'm only sharing this opinion with you for entertainment purposes, but thank you so much for watching. There is plenty more to come. Catch you in the next one. Bye.